Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Tuesday. I hope it finds you well out there. The year of chaos, and boy, is it ever lived up to its billing. The BRICS meeting, well, it started. They showed up. The presidents of Xi Jinping is there. India is there. South Africa is there. Brazil. The Brazilian president fell. I guess he had a brain hemorrhage of some kind. But they sent one of their representatives, and then Turkey's there, Iran there. Everybody's there. They came. Yeah. I mean, this is a new era. I think I was looking at that today because I was wondering. Because that is not normal. Right, especially when the United States dubs somebody, right, the pariah, usually the rest of the world, right, isolates them. Not the case. It's going to be interesting. We'll see what comes out of it. We'll wait. This meeting goes through Thursday, and we will continue to watch that. We've got, the Yankees and the Dodgers, of course, right? Why not? When you get a crazy year like this, do you know that those two teams combined payrolls over $600 million? It's absolute craziness. The Cardinals were on Monday Night Football. They probably won't do that again. That game. Hey, we won! Wasn't very exciting, but we'll take it any way we can get it. Our toll-free number, 800-951-0592. The website at allamericangold.com. And have you figured it out yet? Figured out what's going on? A new all-time record high in gold, silver, now at a 12-year high. Once again, I will say it, and I will say it over and over and over again until I don't think it's true. It's an all-out buy. You heard me right. Especially when we talk about silver. Apparently, $33 doesn't exist. I don't think $34 is going to last very long. We're at $34.50 and heading much, much higher. Get in? Well, you can. And I guess what I'll say is between now and the election, I hope you've added to your gold and silver holdings because, again, as you guys know, raising my gold forecast for next year to 3,300, and I'm going to put a caveat in there. I have the right to go higher. But I think 3,300 is probably the low level for it. If you were listening yesterday, do not be shocked at $50 silver. And I gave myself a little leeway because I said in the next 18 months, listen, it could be the next 3. I don't know. We're going to look at $35, right around that $35 level. That is a key technical level going back to when silver touched 50 the last time. Much different set of circumstances for both the gold and silver markets this time around, and the world now continuing to turn away from U.S. debt. The latest, Tudor Jones was out again. So, so these billionaires, some of them have more credibility than others. But Paul Tudor Jones, he's kind of like Warren Buffett in a lot of ways. He was around in 87. That's where he really came into prominence and been making a lot of these calls. He was out on CNBC this morning talking about the debt. And I don't think people have figured this out yet. Why is gold doing so well? Right now, all of a sudden, here comes silver. But why? I mean, honestly, I've been doing this for over 20 years. I've never seen gold up 7, $800 in a year, in 1 year. And most people are flat-footed. But why? And the answer is very simple. Here's your choice. When it comes to investments and money, being able to buy things, you can buy fiat debt. Now, that could be stocks, bonds, right? Treasuries, because they're all debt. That's all debt, right? Wall Street is debt. Some people don't really understand that, but that's what it is. Or you can buy things that are real. Now, it's really hard for a central bank to buy crude oil and store it, right? That gets real expensive, and right, you could store commodities. You could buy land or houses, right? But the best store of value has always been gold, and this is the choice that they're making. Would I rather hold it in dollars? Or would I rather hold it in gold? That's the choice. From 1971 to about 2004, the answer was I'd rather hold it in dollars. Since then, screw the dollar, give me the gold. 800-951-0592, Patriot Radio News Hour. Joe and Jason sitting here on this Tuesday. A quick look in at the markets. The Dow's down, not a lot, down about 75 points. The S&P's down 15. The Nasdaq's down 25. The U.S. bond market, the 10-year note, 420, 420. That is now a 55 basis point increase since the central bank lowered rates by 50 basis points. So a huge steepening in that yield curve. Oil is up, now at $72. Again, we're waiting, right? Israel's got less than 2 weeks, because they said that whatever they're going to do with Iran is going to happen before the election. We'll see. Gold's at a new all-time record high, up over $24, $27.45, $27.45. Remember, warned you about $27.50. We break and close above there. We're going to go to 28. That could very easily be this week. Could very easily be, depending on what BRICS does, depending on, we'll look at jobless claims out there. Not a ton of data this week. We got jobless claims. We do have durable goods coming out on Friday, I think. But I think it's going to be predominantly BRICS and then Israel, right? BRICS and Israel to see here. Silver up 82 cents. I know. I told you. What did I tell you was going to happen? 34, almost 34.60. We break 35. All bets are off. If we break 30, I'm going to be conservative. If we break 35, we're going to 40. The problem is if we break 40, that really just means, okay, here we go to 50. I mean, that's the problem with what we're looking at here. Keep adding to your portfolios. Get way more diversified. Believe me. Take my word on it. Let me tell you, Goldman yesterday told you, hey, over the next 10 years, we're going to only get 3% a year. And I told you, probably wishful thinking. That's just my opinion. Even the people that hate gold, right, the bankers that control the gold in London, they're like, well, gold's probably going to do 5% a year. Here's what's so funny, is normally they say gold's going to be negative. So 5% for them is like a lot. Our friends at YRefi, you get up to 10.25% a year. Not correlated to Wall Street. You guys sitting out there with these big IRAs, I know there's a lot of your listeners that do. You need to take some of that and set up an IRA with gold and silver. We can help you do it. You need to take some more of that. Call YRefi. Decide what you want to do with it. You can compound it. You can use it as income. You can do whatever you want. Think about 10 years. If you did YRefi, the most you can do is a 5-year deal. But let's just say you did it twice. Did it for 10 years. You're going to double your money. Plus, check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YRefi24, 888-973-3924. And as you know, you got to have a minimum of $50,000. But what's really at stake here? Yep, the election is going to come in 2 weeks. We know that. Who wins? Who knows? Don't know. But Tudor Jones was out today telling anybody that would listen, the bond market is going to force the government's hand after the election. Interesting. Because who was it yesterday? I forget who it was that was talking about the 10-year notes going to 5%. One of the bigger banks. I forget. It escapes me now. Now Tudor Jones is kind of saying the same thing. I don't know if you saw, now, I guess it's official now that we spend more on interest than we do defense, right? Interest payments, $1.1 trillion. And remember, Bank of America already said it's kind of interesting this is happening because Bank of America, remember, they think interest payments are going to be like $1.5 trillion next year. Which means the 10-year note, the yield's actually got to go higher. And guess what? That's what it's doing. What is the 10-year note? That's just simply one of the vehicles the government uses to sell debt. Right? So every day we go into debt. Every week we have auctions. And they have varying lengths. You could have a 3-month auction, a 6 months, a 1-year auction, a 2-year auction, a 5-year auction. So we got 7-year auction, 10-year auction, got a 20-year auction, a 30-year auction. I mean, why do you got to have all these dates? Well, because there's a lot. There's a lot. And about, I don't know, once or twice a year now, we've either got to add another auction like the 20-year, or we've got to increase the auction sizes. Right? We're going to take every auction and we're going to add $2 or $3 billion to it. This is what we've been doing. Now, the 10-year note, why the 10? That's where a lot of rates come from. Mortgage rates, right? Interest rates on car loans and things of that nature. It's all predicated on this 10-year note. So you go to this auction and you loan the United States money for 10 years. Right now, You're only going to get 4.2%. It's a terrible investment right now. Right? All of these countries are like, man, this investment sucks. Because inflation is way more than that. Over a 10-year period, what are we talking about? Inflation, if we get it the way the Fed wants it, 2% a year, that would be 20%. Why would I only want 4? That doesn't add up. That dog doesn't hunt. This is what's happening right now. Tudor Jones knows it. The Chinese know it. All the countries over at the BRICS Summit right now, they all know it. Why haven't you figured it out yet? Tudor Jones on I don't know, it's national television, on cable television, right? CNBC. We are going to be broke really quickly unless we get serious about dealing with our spending issues. Uh-oh. Here's the problem. If the government decided that we only want to be $1 trillion into debt, the economy's done. This is, and Tudor Jones knows this, this is the problem. We have this quote-unquote, okay, well, everything's kind of okay economy with the government running $2+ trillion budget deficits. The question is, after this election, will we have a Minsky moment here in the United States and the U.S. debt market? Now, what's a Minsky moment? A Minsky moment, I guess the easiest way to explain what a Minsky moment is that it's a major sudden event. A major sudden event, kind of like maybe black swan, if whatever word you would like to describe it. But he's talking about it in the debt markets. Remember, Bank of America said the same thing. Hey, we're one moment away from having one of these moments. Jason, it's coming. They're telling you it's coming. Jamie Dimon. Let's not forget. He said, don't be shocked if interest rates go to 8%. That's a Minsky moment. Jason, I don't understand why it is that people haven't figured out. What do you think gold's been done? Why do you think gold's up $800 in a year? Because everybody already knows. Guess who the only ones that don't know? The generally dumb public, Jason. We're the only ones that don't know.
Yeah. I'd say $900 in a year, Joe. I was giving you those numbers. It's gold and silver. I'll say this: when silver goes above 35, Joe, I'm just going to start calling it record high now because I'm looking at the historical numbers. I like looking at the average daily close, and you look at that, and the highest year is 2011. The average close for silver in 2011 was 35.12. We are absolutely going to, 1980, remember, Joe, we always talk about, oh, yeah, silver went to 50 in 1980. But the average close on silver was only $20.98. It didn't spend hardly any time in that, silver is way more expensive than in 1980. It is. Now, adjusted for inflation, maybe not. But silver is doing what it's supposed to be doing. These things that you're talking about, Joe, are these people are they're telling you through their actions. Warren Buffett is getting into cash in a way he's never done before. He's fighting with the stock buybacks to get out of his 10% holdings in Bank of America. These people that know where the economy's headed, the guys that probably know more than Joe and I how to move their money around, that's why they're so wealthy. They're through their actions are telling you what's happening, and silver is and gold is a safe haven. Average closing price for silver so far in 2024 is $27.61. Just at that number, it'll probably be the third highest average closing high for any year for silver. So as far as I'm concerned, Joe, especially the way silver's moved up and it's holding its positions, this isn't 2011 where it spiked and came down. I mean, quite frankly, in 2010 and 2012, silver closed higher at the end of the year than 2011 did. So really, those end of the year closes were 30, 63, 28, 18, and 29.95. We're going to close higher than that this year. This is record high silver. As far as I'm concerned, $35 is record high silver, and we're going to bust through that. And or are we even going to see 40, 42, 45, 48? I don't know if we'll even see that. They'll probably blow past that, Joe. People really need to wake up. You got to just wake up. If you got anything sitting around, I know people are waiting for this to happen or waiting for that to happen, or I got to see who's going to be running the country. The Federal Reserve and their banking interests and their corporate interests, they run the country. As soon as you figure that out, then you'll know why I bought into this company and why I got into gold and silver, because I figured it out. You need to have yourself, take care of yourself and your family, and be an example to others so that they can take care of their financial house, Joe.
I'm just going to say it this way, real simple. Tudor Jones just said we're talking about something that is fiscally and financially impossible when it comes to the U.S. debt. 800-951-0592, Patriot Radio News Hour. Tudor Jones now, the latest to warn about where we are in the debt market. And I explain it to you all the time. We talk about the auctions and how it's been a struggle. We talk about forming. Now, yeah, and depending on if you want to count like the Cayman Islands and stuff like that, the UK's loaded up a lot on U.S. debt. But here's the issue. Just go back 20 years. 04. Foreigners were buying 85-90% of all the new debt. Go back 10 years. Now they're still buying 5 or 6. Half. Right now, they're only buying 10%. So every $10 of debt, new debt, they're only buying 1. And as this BRICS thing grows, we're going to go to 0. Hey, that doesn't, now you got to remember, that doesn't mean they've sold all the U.S. No, it just means they're not going to buy any more of it. Now, some of them, like the Chinese, yes, they're selling. The Japanese, by and large, yeah, they're selling. But what we're going to end up with is this Minsky moment, as Tudor Jones calls it. It just has to be one auction. Could it be a 10-year auction, as an example, where instead of them buying $1 for every 10, they buy 0? Or heaven forbid, for one auction, they were net sellers. That will send off this cascading effect. And Tudor Jones, here's what he said about the election. He goes, well, let's look at it either way. He goes, in his opinion, Trump and Harris are the least suited for the job ahead of them. Because they're both spenders. Whether you like it or not, Trump's a spender. He is. He's a spender. Trump likes tax cuts, right? You hear it all the time. He's also saying inflation is not going away, and it will be particularly bad if Trump wins. That's Tudor Jones. I don't know. I don't think it's going away no matter who wins. By the way, why is gold up today? Neil Kashkari, the Minneapolis Federal Reserve chief, has just gone on record. He's the first one I've heard say it out loud. Maybe we need a higher, instead of 2% inflation, maybe we need to have a higher rate. Oh, here we go. Right, Jason? Here we go. And listen, I know why he's saying it. The only way that we can go $3 trillion into debt, we got to have GDP of like $40 trillion. Right? That's the only way the math will work.
I think foreign buyers, Joe, will buy U.S. debt even when the dollar sucks really bad. But I think the main reason right now they're not buying is because I think they're expecting higher rates. Why would you buy when the Fed's trying to lower the rates and trying to act like they're going to do the same thing over and over again when it looks very real that we're going to have higher rates? I think more foreign buyers of American debt will happen if the rates go back up. Then you'll start to see them coming back. Maybe gold takes a hit then for a little short time, but that's what I see, Joe. They're not buying because the rates aren't going up. And I think they're expecting the. I don't think they're. I think they're not fooled by the hey, we're going back to zero. I don't think anyone thinks that in these foreign nations.
Let me put it to you this way, because here's what Jason's saying. When the rates go higher, you lose money on all the bonds you've already owned. The Fed, okay, now they've sold almost $2 trillion worth of debt. Do you know how much money they've lost on it? They're sitting on a paper loss of $200 billion. Now, I don't know how they get away with having a paper loss, but they do. $200 billion. That's how much money they've lost. Now, think about all these countries. We're buying all this, and we keep losing. We're losing tens of billions, hundreds of billions of dollars. And it's going to get worse. By the way, silver's now up $1. $34.75. Get ready. It's not going to stop. Today's special, and this thing is a barn burner. Mint State 62 $10 Liberties. The exact same price as an ungraded circulated $10 Liberty. $15.25. You can get a PCGS or NGC half-ounce graded gold coin, and it costs you no premium, nothing. $1,525. Jason, I've got about 70 of these. This is an outright steal. 800-951-0592.
I don't think I've remember us selling graded 10s since I've been on the air. So I've been on it. It'll be 7 years early next year, so I'm coming up on 7 years. I don't remember graded 10s coming on the air for anywhere near the raw price. This might be the first. There's very few first times. This might be a first time for me on this one.
I'm going to say this. Very rarely, we've done it with 20s once in a while, where you get a graded 20 for the same price or close. Never in a fractional. Never. This is a first. I've been doing this 20 plus years. 0 times have I sold a graded fractional coin for the same price as the non-fractional. And this isn't a Mint State 60 or 60. This is a Mint State 62 $10 Liberties at $15.25 at 800-951-0592. We'll be back right after the break. 800 951-0592. If you're brand new, if you've never ordered from us before, it's so simple. You just call the girl and say, I want the special. That's it. And we're going to ask you one hard question. How many would you like? And you just tell them, I want 1, I want 5, I want 10. I want all that you got left. You can pay for it by personal check, bank wire, cashier's check. We charge 2% and only 2% on credit cards for those of you that want your points. And we take them all. Visa, MasterCard, Discover, American Express. When you call and lock in, we give you a trade number. That locks you in. Listen, gold goes up tomorrow $100. We're not calling you up, hey, you got to pay us more money. No, you're locked in. We charge a flat $35 for shipping. We ship FedEx. And really, that's it. There's no other thing. We don't call you. We don't email you. We don't harass you. We don't do any of that stuff. We are big on privacy. We don't sell our client list or any of that other nonsense out there that most of these other places do. We don't do any of it. For those of you, well, I don't know what a graded coin, what does that mean? It's a good question. It just means that it has less dings on it. You know, you got to remember, these are $10 Liberties, 1866 to 1907. Right, so you're talking about coins that are, 120 plus years old and older. That just means the graded coins, they never got circulated. In other words, it didn't end up in the consumer's hand. They didn't slap it down at the hardware store. It sat in a bank vault. You know what? Most of these probably went on a boat to Europe. Probably. That's probably where they came from. And it's just like anything else, condition. There is no, in coin world, instead of 0 to 10, 10 being perfect, they go 60 to 70. Why? Who knows? That's just what they picked. In Liberties, I don't know of a coin above a 67. And I've never seen a 67. I've seen it like on my computer, but I've never held one. But these are Mint State 62s. And here's the great thing. They come in these hard plastic cases, holders, as we call them. You see the coin front and back and everything else, and it's got a little serial number, right? It's been authenticated, right? For those people out there, we've been doing this for like 30 years now. Well, how do I know it's real? Well, here you go. Here you go. Mint State 62 $10 Liberties. This is like ridiculous dumb. $1,525. Start putting it away. 800-951-0592. And when you go and buy those Girl Scout cookies, man, are they expensive. The Girl Scouts are now saying it's still not enough. We need to raise the yearly membership. So think about this. To join the Girl Scouts, it costs you $25 a year. Well, it did. How much do they got to raise it? I mean, you got to go 30, 35, 40. Maybe you got to go to 50, double it. No, $85. A 240% increase to be in the Girl Scouts. Are we going to enter into this thing where it's like high school sports? You got to pay to play, and all of a sudden, parents out there are going to be like, well, gosh, Sorry, honey, you can't be in the Girl Scouts because, well, it just costs too much. Jason, it's crazy what they're trying to tell us about inflation. And I love that Neil Kashkari is going, well, maybe we just need to raise it. Think about this. What if they double it to 4%? That would mean every 10 years, you would lose 40% of your purchasing power. And this is what Tudor Jones is talking about. We either got to have massive inflation or we got to cut spending, which will put us into a depression, because we're about ready to have a Minsky moment in the bond market, Jason. And this is why gold and silver are doing what they're doing. There's no doubt in my mind this is why.
How much is a box of Girl Scout cookies today?
You know what? I don't know. This is just the dues.
$15, is that right? I'm looking at prices. $15 looks like what it is for a box. So,
boy, I just looked at it on Amazon. $14.90. Really?
So in 1992, a box of Girl Scout cookies was $2.50. From 1952 to 1962, it was 50 cents to a dollar for a box. There's your inflation, Joe. Oh my gosh! Yeah. Just a little over 30 years ago, this box of cookies was $2.50. Kind of sounds like silver, doesn't it? Box of Girl Scout cookies, an ounce of silver. Except silver's way above that now. But $15. I'm seeing some prices for $30 for a box of cookies.
Well, but you know what? I don't think they're that high when they're out in front of the grocery stores when they're I guess in season. But still, wow. 800-951-0592. Jason and I wrapping up a Tuesday. We'll be right back. 800-951-0592. Mint State 62 $10 Liberties. Same price as an ungraded $10 Liberty, $1,525 at 800-951-0592. I'll tell you what. You want to buy 20 of them? $1,520. That way you can say I bought them for even less. How's that? On the silver side, man, silver flying right now. Rolls of silver quarters, $240. Rolls of silver half dollars, $290. Rolls of silver eagles, $845. Guys, I think 10 days ago I tried to get you guys to buy them and begged you to buy them at like $7.25. Yeah. Guess what? Don't be shocked at $1,000 silver rolls before the end of the year. Don't be shocked by it. I will tell you this: we'll have $1,000 silver rolls next year. That's what I think. 1,000 plus, and it's kind of funny. Are you ever going to be able to buy gold for less than $3,000 an ounce again? I doubt it. Not when you're looking at what we're talking about right now. Too many people. Remember what Bank of America was saying, quantitative easing by April. Holy smokes. Could you imagine an environment where the Fed has to go to quantitative easing, but interest rates aren't at zero? They can't be at zero because inflation keeps going crazy. And oh, by the way, the yields in the debt market are getting so high, they have no choice. I'm going to tell you right now, if the 10-year note gets to 5%, quantitative easing's coming. The Fed will do whatever it can to try to get those interest rates down. I think we're going to see a balance sheet well over $10 trillion and beyond. We're going to have debt levels that are absolutely unheard of. And oh, by the way, people are talking about a Minsky moment in the U.S. debt markets. really, really smart people. All of a sudden, Warren Buffett selling Bank of America stock. Jason, that really makes a lot more sense now, doesn't it? Right? And now I get it, right? Why he's just been unrelenting and is desperately trying to get under the 10% so nobody can stop telling them. But Bank of America keeps buying back their own shares to keep them above it.
Sell, baby, sell, right? What's he going to put his money into, Joe? Got some guys thinking he's putting it in silver and doesn't want to tell anybody. Look, he's looking like he wants to go back to his 90s roots of buying silver, and we may not be able to know if he's buying it for sure or not. There may not be any record of it.
10-year note now broke 420, 421. Here we go. This thing, it's just not stopping. It really, truly doesn't make a whole lot of sense here. The only thing, I guess, if the Fed says we want 4% inflation, I guess then at that level, Jason, I guess they could cut rates, right? Really hard to cut rates with 2% as your number. Let's just change it. Hey, by the way, if you go back to the shows I was doing in 07 and 08 when they were doing this, I was the one telling you, oh, don't worry. They'll change it later. Yeah. Get ready. 800-951-0592. Get it put away. Jason and I are coming